Have you ever felt that simply investing in stocks might no longer be enough to secure your financial future? Imagine if the very foundation of what we call safe investments was shifting under our feet. What if the true opportunities for building long-term wealth were hidden in places you haven't yet explored? Today, we are going to take a journey beyond the stock market, into new frontiers of investment that could redefine the way you think about money, stability, and growth. For many decades, the stock market has been the poster child of wealth creation. It's what most people think of when they hear the word investing. Buying shares of well-known companies like Apple, Amazon, or Coca-Cola has become almost synonymous with building a secure future. And for a long time, this was a reliable path. But the truth is, the stock market is not as invincible as it seems. Recent volatility, market crashes, unexpected downturns, or sudden collapses of safe giants has reminded us that relying solely on public equities can be a risky bet. Stocks can be wonderful wealth generators, but they also tie your fortune to factors you can't control. Corporate scandals, geopolitical conflicts, pandemics, or even unpredictable tweets from influential figures. If you want to build true resilience, you have to look beyond the obvious. You have to diversify not just within the stock market, but outside of it. And here is where the real excitement begins. Because the modern world has opened doors to investment opportunities that were unthinkable just a few decades ago. Opportunities once reserved for the ultra-wealthy or big institutions are now accessible to everyday people like you and me. Let's begin with real estate, but not the kind you're probably imagining. Traditionally, real estate investment meant buying houses, apartments, or maybe commercial property and hoping they would increase in value. That model still works, but it is no longer the only path. Today we live in an age where real estate has gone digital. Have you heard of REITs, estate investment trusts? Think of them like mutual funds. But instead of owning pieces of dozens of different companies, you own shares of a fund that invests in income-producing real estate. A REIT might own shopping malls, office buildings, apartment complexes, or even hospitals. The beauty of REITs is that they allow you to benefit from the steady cash flow of real estate without having to be a landlord. There's no fixing toilets, no dealing with tenants, no late-night phone calls. Just exposure to the real estate market with liquidity, because most REITs are traded like stocks. But the frontier doesn't stop there. Welcome to the world of tokenized real estate. To understand it, let's first break down the concept of a token. A token, in finance and technology, is essentially a digital representation of ownership, built on blockchain technology. Imagine you want to invest in a luxury hotel worth $50 million. Impossible, right? Not anymore. With tokenization, that hotel can be divided into thousands of digital tokens, each representing a small fraction of ownership. You could buy a handful of these tokens, just like you buy shares in a company. This means that prime real estate skyscrapers, resorts, even farmland is no longer the exclusive playground of the ultra-rich. Tokenization democratizes real estate. It gives you access to opportunities that would have been unimaginable just a decade ago. With lower barriers to entry, and in many cases, the possibility to trade your tokens with other investors just like stocks. Now let's talk about specialized real estate niches that are quietly becoming gold mines. Have you ever thought about data centers? These are massive facilities where companies like Google, Amazon, or Netflix store and process the endless river of digital information that fuels our world. Every photo you upload, every video you stream, every online transaction, it all depends on data centers. As our digital dependence grows, so does the need for these facilities. Owning a piece of this market directly or indirectly means positioning yourself in one of the fastest growing sectors of modern infrastructure. Consider vertical farms. As the global population surges and climate change threatens traditional agriculture, vertical farming has emerged as a revolutionary solution. Imagine skyscrapers filled with layers of crops, grown indoors with controlled light, water, and nutrients. These futuristic farms use far less land and water than traditional farming, and they can exist in the heart of cities, reducing the need for long transportation chains. Investing in vertical farming real estate is not just about profit. It's about being part of the solution to one of humanity's greatest challenges: sustainable food production. Then there are medical facilities. Think about how aging populations around the world are increasing the demand for hospitals, clinics, and long-term care facilities. Investing in medical real estate means not only earning returns, but also aligning your money with one of the most essential needs of society, like retail stores that may go out of fashion, or offices that might empty out as remote work expands. Medical facilities remain a critical part of any community. They are in many ways recession-proof. And what if you don't have millions to buy a stake in a data center, vertical farm, or hospital? That's where crowdfunding platforms come in. Crowdfunding, at its core, is the practice of pooling money from many investors to fund a project. Imagine you and thousands of others contributing small amounts to finance a medical facility in a growing city. Instead of one person carrying the burden, everyone shares the ownership and the profits. Crowdfunding democratizes investment. It allows regular people to participate in big projects that would otherwise be beyond their reach, and it spreads both the risks and the rewards. But real estate is just one frontier. Let's expand our vision. Alternative assets are becoming increasingly attractive as ways to diversify wealth. Private equity and venture capital used to be the domain of elite investors. But platforms now allow everyday people to put money into startups and growing businesses. Imagine being able to invest in the next big tech company before it goes public. Of course, this comes with higher risk, but also the potential for enormous returns. And then there is the booming world of art and collectibles. It may sound surprising, but paintings, luxury watches, rare wines, and even collectible sneakers are becoming serious investment categories. Why? Because they hold tangible value. They are limited in supply. And in times of financial uncertainty, wealthy individuals often flock to these assets to store value. Think of it like gold, but with a touch of culture and status. Alternative lending platforms are also changing the landscape. Instead of keeping your money in a bank that pays you little to no interest, you can lend it directly to individuals or businesses through peer-to-peer platforms, earning higher returns. This is not without risk, of course, but it represents another way of moving beyond traditional finance. And what about commodities? For centuries, gold has been the safe haven in times of crisis. But today, the definition of valuable commodities is expanding. Rare earth minerals, lithium, and renewable energy infrastructure are now in high demand as the world transitions to clean energy. Investing in these resources is not just about financial gain, but about supporting the global shift toward sustainability. Agricultural commodities, too, are becoming increasingly attractive, especially as inflation rises. Investing in food production is not only profitable, but essential to human survival. All of this may sound overwhelming, but here's the truth. Future-proofing your portfolio is not about chasing every shiny new trend. It's about balance. It's about creating a strategy that reflects your risk tolerance, your goals, and your values. Some investors may allocate 10% of their portfolio to alternative assets. Others may go further. The key is to be intentional, to research thoroughly, and to adapt continuously. How do you begin? Start by exploring reputable platforms that specialize in these investments. Many now offer easy access to real estate, crowdfunding, art investments, or alternative lending. Seek advisors who understand not just traditional finance, but the new frontiers as well. Most importantly, commit yourself to continuous learning. The financial world is evolving faster than ever, and the greatest risk is standing still. The illusion that stocks are the only path to wealth is fading. The future belongs to those who are willing to look beyond the obvious, to explore new frontiers, and to align their money not just with profit, but with purpose. Imagine a portfolio that not only grows, but also supports sustainable food, clean energy, better healthcare, and innovation. That is the promise of investing beyond stocks. And remember this: history has shown us that those who adapt, who are willing to learn and evolve, are the ones who thrive. The financial world is not static. It is alive, it is changing, and it is waiting for you to step into it with curiosity, courage, and vision. Thank you for joining me today. Please let me know what you think in the comments. Together we can make finance a force for good.